In today's video, we're going to build a very simple backtester to try and figure out, do Starbucks holiday drinks have any sort of impact, any kind of correlation to Starbucks' stock price? Now, for those of you that follow the Starbucks holiday drinks, they just came out on November 3rd. And for anyone who's infatuated with Starbucks, you know that this is a time that they hold very near and dear to their hearts. People are crazy about these holiday drinks. So I'm curious if these drinks have any kind of predictable, repeatable impact on the stock price. It's a far-fetched question, but we can build a very simple backtester to try and determine what tends to happen more often than not. Now first, let's start by talking about when this drink season starts, which gives us the parameters for our backtester. Now the start date typically tends to be early November. This year it was November 3rd, so just a few days ago the drinks were released, available for people to start purchasing. The end date is typically mid-January. From the research I found online, it was typically 2 weeks into January of the next year, so I've rounded that off to January 14th, and in our backtester we'll round that out to the end of the month of January. But there's a few tests we'll also run. Another end date that I think most people have, just cognitively, is the end of December, the end of this year, as the period when the holiday drinks start to slowly go away. So I have an alternate date here of December 31st. Now with these three dates, we can create a very simple backtest hypothesis, or a series of tests rather, that we're looking to run inside of Thinkorswim. Now the first test is going to be what tends to happen between the full period of this holiday drink season. So that's November 1st to Jan 31st of the following year, what tends to happen to the stock price. And we'll use basic stock prices like the open as of November 1st, so the very beginning of the month. And then we can also compare that to the close at the end of January. That's the basic premise of our backtest. So what tends to happen between November and January, which is the entire holiday season, and a little bit more both at the beginning and the end in terms of days. The second is going to be shrinking that down to just December 31st, what tends to happen from November 1st to December 31st. And then the last question is, in the event that, say, maybe these drinks or the effect of these holiday drinks actually take place after the season is ended, we'll also test what tends to happen in January along with February, going to the end of February, depending on leap year or no leap year. So these are the three basic tests that I'm looking to run with this backtester. You'll notice it's a very high level backtester here. We're not looking to overcomplicate this. In fact, the code is probably going to be something like 2 to maybe 3 lines max, so it's fairly straightforward. Now let's take a look at the results first, as I think most of you are curious around that. So I ran this experiment using the backtester we'll be building, and these are the three different scenarios we just laid out. So the first one is November 1st all the way to January 31st, a positive P&L number here. This is using 1 share of Starbucks, so that's one thing to keep in mind, that prices of course fluctuated, and we're going all the way back to 1993, so 2 assumptions to keep in mind. But given that, the P&L for the entire period is positive, 23.38. The probability in terms of the stock price increasing during this period, 66.6%, so greater than 50 in terms of better than a coin flip. And there were a total of 30 trades that it took in the entire max historical period that we have. That was true across the board here, 30 trades. Now, if we shrink that down, so we get rid of January as a month altogether as part of this test, and instead we're looking at November to December of this year, then we have a P&L that's slightly higher, 49.64, with the same probability here. So there's some more winners that come into play, or rather, you're able to filter out some losses in terms of giving back gains as the next month progresses, the month of January. So far we're seeing November 1st to December 31st as being the period that is the most profitable. Now, if we look at the effects of the holiday drink season and we start our measurements as of January 1st of the following year, and we're taking a look at what tends to happen January and February, that number is negative 23.76. And in terms of the percentage, that goes down pretty close to 50-50, 53.3% off of the 30 different instances we have. So across the board here, the scenario that, for those of you that are curious, the holiday drink season, if it has any impact at all, tends to happen more prevalently in that November to December time period, as opposed to carrying forward for the full holiday season with those 2 weeks inside of January. So with this out of the way, let's go ahead and build the backtest, and through that, I think you'll learn how you can test your own scenarios as well. This is very high level, but I imagine some of you might be curious to try different dates, different specific parameters, maybe different stocks that have similar sort of recurring events every single year, maybe around the holiday time, maybe not even around the holiday time. So let's dive in and we can start writing some code. Now here I have a chart of Starbucks. I have no indicators loaded on my chart, so let's start by clicking the studies icon. Switch over to the strategies tab. That allows us to create a backtester, which gives us a nice easy P&L without needing a whole lot of complications. And there, click create. Now inside of this, you can give this a name if you'd like. For me, I'm just going to leave it as new strategy 10 since it's not really something that I imagine we'll use too often. Now there's one line of code that I think we need here, which is what is the period that we're looking to test. So we had 3 different scenarios here. So let's say def scenario 1. And this scenario we said was November, December, and January. We went from November 1st all the way to January 31st of the following year. So for that, we can very quickly use the getMonth function, and we can make this a Boolean condition, which is return true if getMonth is 11. So if we're in the month of November, or if we're in the month of December, or if we're in the month of January. So very simple here. Now, if these conditions are true, then we can plug that into our add order parameters here. So we'll say add order. We're only looking at a buy to open, so buy to open. In terms of our Boolean parameter, when we're looking to actually place this order, that's if scenario 1 is true, then go ahead and use the opening price of that month in order to trigger our opening order. Now we can create one more, which is going to be our closing order. So we'll say add order. Order type dot sell to close, and here we're going to take a look to see if scenario 1 was true on the previous bar and it's not true on the current bar. What that tells us is the previous bar was one of these 3 months, so in this case January, it was the end of January, and today we're in February. That condition is no longer true since we're no longer in month 1 or 11 or 12. So with that, we can close this out. We can use the previous candle's closing price as our exit condition here, and we can use the same quantity of 1. Now I'll remove this auto condition that comes default inside of our code. Let's click OK and see how this runs. So this should give us the November through January scenario backtest here. So if I click apply, OK, and if you don't see this floating P&L down here, click global strategy settings and make sure you have display floating P&L study turned on. Now I can click OK here, and I can go back the max historical period, and if we right click show report, come down, we see the P&L of 23.38 over the 30 trades that we have been backtesting. This lines up with the table we had for that scenario, so now let's go ahead and code in the remaining scenarios as well. So we had then scenario 2, which was December 31st, so there we're looking at is getMonth equal to either November or December, and we can get rid of this January portion of this Boolean condition. Now to simply switch between scenario 1 and scenario 2, we can copy paste, since we're trying to keep this as simple as possible, into scenario 2 for our entry condition, scenario 2 for our exit condition, click apply, OK. And there, if we take a look at the P&L here, that number goes up to the 49.64 that we saw in the table. And you can manually go and check each one of these trades, really each one of these historical periods, to see what tends to happen. And this goes all the way back to the 1992 to 1993 season in terms of the data that we use. Now if I close this out, we have one more scenario to add in, and that's testing January through February. So for that, we can copy this one more time here, and I'll say is getMonth equal to 1, or is getMonth equal to 2. And we'll change this to scenario 3. I'll plug that in, paste that across the board here, click apply, click OK, and there we can even see this in the floating P&L. That number goes to red with most recently this previous season right here. And if we right click, show report, we can see that down here. That was our big loss, minus 24.68. So across the board here, we have 3 different scenarios that really we've hard coded inside of this backtester code. The first one is buy at the beginning of November, hold through the end of January. The second is buy at the beginning of November, hold through the end of December. And then the third is buy at the beginning of January of the following year and hold through the end of February. So 3 different ways that we can test what tends to happen with this holiday season for Starbucks' holiday drinks. And of course, this doesn't mean there's any sort of correlation, but I do find it interesting that even with more data points here, if you click apply, that November and December time period tends to outperform, which is really the time you see the most marketing for Starbucks holiday drinks. You'll probably see it across the board on your social media posts. You can also go back and see where that P&L tends to start to drop off in terms of starting January, which is really the beginning of January where price action in Starbucks starts to decrease, and do a little bit more deeper dives if you find these sorts of experiments useful. I'm not sure you could derive any useful trading insights from this, but I do think it's a fun exercise, and it's a good way to try some very basic backtesting code, use the data inside of Thinkorswim that we have available, and start to run some of these basic tests to just see what tends to happen, especially if you have any kind of curiosity around these things. Alright, hope you found this tutorial useful. Take care everyone, good luck trading, and if you do enjoy Starbucks, I hope you enjoy your holiday drink.